Eric Mother, Mother.com, January 12th, 2016. Take a look at markets here. Dow up about 0.21%. NASDAQ is up about 0.75. S&P 500 up 0.3. Market is off the highs for the day. Let's take a look at the charts. And I think the conclusion of this analysis is going to be, let's be a little bit careful here, as discussed in part 2 of this past weekend's market analysis video. If the NASDAQ can hold the recent weekly closing low, the level there is 4683.92, then that would suggest that it has found much needed support. Right now trading at 4673, so about 10 points shy of 4683. If it can recapture that level, let's just be aware that this might be good enough to stop the current market down move. So just be aware that yes, things might still show downside action, but let's be aware that, as discussed on Sunday, there are two lines here that I think we should pay attention to. And so we go back to the previous ideal entry, which was somewhere here. So this is this entry here. Let me draw it that way. So this entry there off the lows of 2011, and the market did bounce off the lows there. So we draw a line from there, and then there's also another line coming from the bottom lows, connecting the lows of 2011 and the lows of 2015. So right now, if this can continue being positive for the week and build on this market might actually start moving higher. So that's the risk here, to assume that the market can't go lower. We take a look at this. Take a look at another chart here. Take a look at the Dow, and take a look at the Dow daily. So we're taking a look at the Dow daily here, and what we see here today, it is trying to move back above 30.90. If it can be successful, which is what it's doing right now, that might be good enough to start building onto some type of a recovery. So let's watch that. The last time we bounced here with uniform activity around the 30.9 level was during the lows here. Uniform activity below 30.90 and back above it for entry back there. And here, if we can have uniform activity bounce below 30.90 and back above it, that might actually set up the market for a bounce. Take a look at the Dow hourly, and I think this is where you can start seeing a little bit of a problem with the current attempt to move higher, is we are coming back to test the break level. And so if you're looking for reasons to go long, the first thing I would say is wait for this to give you a buy signal. Right now we are looking at this as being a sell signal there, and if we draw a line from there, it should be something like that. You can see that this was initially resistance, which gave us the high there, and now we are coming to show resistance on the same line there. So that's a sell signal short term, which might explain why the market came off the highs. So anybody looking to buy any ideas mentioned in this video, first and foremost, you might want to insist that the Dow be moving above this hourly resistance line, which has been a problem since the break here at the beginning of the year. Let's not forget, on the monthly chart for the month of January, we are seeing obviously here that the Dow is moving below 50 on its monthly RSI. Generally, that means that this is going to be a big down month into the close of the month, as long as it is holding below 50. So that's the risk. The downside risk, in other words, continues. We are also seeing here that the Dow is holding above the 2015 monthly closing lows. So right now this is support on that line there, which is good action. So monthly support taking place on the Dow for now. But the key here is what happens with the RSI on the monthly. Anything showing the market holding below 50, you're not going to get a strong bounce until the market can move back above 50 like it did during this period here. Let's take a look at the SPX, S&P 500. And what we have here also is an attempt to hold the lows of 2015 on a weekly closing basis. So right now that level to watch is 1921.22. Right now that is holding, which is good support. So if that continues being the case, don't be surprised that in the coming weeks that the market actually starts building on this support. So anything above 1921.22 is good. Anything back below that is bearish. So right now, if you are to be a neutral, you'd say that there's an interest here for this market to bounce because 1921.22 is holding. Take a look at the S&P 500 daily. And what I'm going to do here is I'm going to take the daily closing low there, and I'm going to do a straight line. And you can see it connects perfectly with the daily closing low on Friday. So that by itself is another example of a market that is holding support on a trend line. We are also seeing the S&P 500 recapture back above 30.90. The more it builds on this, the more it looks like it is uniform activity bounce at the 30.90 threshold. So which is again another bullish sign as long as that is holding above 30.9 and as long as this line here continues to show much needed daily support. Of course, at some point if we come back and break that trend line, then we can expect to see the market push lower. Right now we are seeing support. We have to assume this market somehow is concealing the fact that it wants to bounce. Take a look at the S&P 500 hourly, and what we have here is another sign that short term is where the market is finding a little bit of a problem. Ever since we broke through this blue line, we began the year with this drop. We haven't been back there, of course. It became resistance on the line there again, which is the highs there. And also now we are seeing this as resistance. So if you're bullish on the market and want to see the market move higher, the first thing you'd like to see is the market move above that blue line. Otherwise, right now we are seeing resistance. So short term, we are seeing a little bit of a fight taking place between the dailies, weeklies, and now on the hourly. So let me show that. Let me just explain that. So we got the weeklies looking a little bit okay, starting to build and showing support. Dailies, as long as they hold above 30.90, they're starting to look okay. But right now we're looking at the hourlies, which are still showing resistance. So more often than not, the rule of the thumb is the bigger time frame wins whenever there's conflicting signals. So as long as the weekly and the daily look good, eventually the hourly is also going to look good. So just be aware that the bigger time frame tends to win out whenever there's a confusing analysis. On the price level, we can see this resistance line on the hourly. So as long as this is resistance short term, there's no need to find long side ideas. At some point, the market might move above that resistance line and also move above the RSI resistance line. And when it does, that's when you can expect markets to truly be on the rebound. Right now, we are seeing a slight rebound, but coming to short-term resistance. Because the VIX is high, or at least above 20, let's take a look at the 5-minute chart, which we only do when markets are trading with the VIX at elevated level. And so here's resistance here on the top side. So at the highs of the morning, hit that level. We also came back and tested the uniformity line right there. That line so happens to be at about 61.8 thereabouts. It has been a problem for the market since the break here of the highs there. Resistance here gave you that high, uniform activity above the red line, back below it for a short-term high there. And recently, as of yesterday and today's action, we've gone above that red line, back below it. So that's a short-term sell signal. So that's the bearish argument. I want to show you the bullish argument, which is also very valid. And let's take a look here. What I'm going to do is, bear with me here. All right, so we're going to take the highs, connecting the highs there, extend it. And what we see here is we've broken above that green line. We jumped above it. We're coming back and back testing it. The more we start building higher, the more it suggests to me that this right here is a buy signal. Hope that makes sense. So this is a back test. Let me do that another way. So hold on. Let's change a few things here. Let's change the color. All right, so I'm going to draw this with a blue line. So there, hope you can see this clearly. So we moved above that. We broke out for the entry there. RSI is coming back and testing the blue line. If it holds on the 5-minute chart, it suggests that even short term the market might start moving higher. So lots of confusing signals there. So let's take a look at the VIX. On the weekly, we can see here 24.39. So 24.39 was the buy point. Right now we are back below that, so this is looking like a failed breakout. So as long as the VIX is back below 24.39, this is bearish for the VIX, bullish for the general market. We can also see that if we take this line here, this line is a tad bit just below 61.8. So below 61.8. So this by itself should tell us that the VIX is stalling, especially as long as the price for the VIX is below 24.39. This tells me to expect the VIX to be on a down move, while the general market should eventually move higher. So below 24.39, the VIX is failing. It's also giving us a double top on the RSI on the weekly, suggesting markets could surprise people to the upside. Take a look at the VIX daily. And also on the daily, we can see that it's failing to hold above this daily closing high. So there's another failed breakout. Let's call it about 24.39 again. So anything below 24.39, this is a failed breakout. We're also seeing the VIX struggling at about 61.8. If I draw it somewhere there, you can see that if you use this for resistance, this line at about 61.8 on the daily, every time the VIX struggled, even here, it went above that line with uniform action and back below it for the highs there. And then there was a slight resistance there for the highs there, and resistance here for the highs there, short-term resistance here for the highs there, and now we are seeing resistance for the highs as of Friday. So if we take a look at this chart, we might start seeing that the VIX is giving us a sell signal for the VIX, buy signal for the general market. Also short-term on the hourly, you got improving price highs with declining technicals, which might set up for an interesting pullback. We already got that pullback here. So I guess the one thing we can watch for is whether the VIX stays above 50 on its right here. If it can hold above 50 on the hourly, so it bounced above the 50 here for this highs there, bounced here for the highs, for the lows there, sorry, for the lows here during this point, and this support level right now is trying to hold at this lows. So let's take a look at, and I'll pretty much have a summary towards the end, but what I'm talking about here, you can see that there's a confusing here because weeklies on the VIX look bearish. So for the VIX, bearish, the dailies look bearish, and we are seeing that the hourlies look a little bit not that bad. But keep in mind that by default we are going to have to go with what the weeklies and the dailies are telling us, because the bigger time frame tends to win out whenever there is a conflicting analysis. So I'll still lean towards the VIX stalling as of right now, which might suggest that maybe there's a chance here for the market to move high. We're taking a look at crude oil right now, which is trading at about 30.79, which is fresh lows, and really there's no surprise here. On the weekly, RSI continues to trade below 30.90. On the daily, I believe it's the same thing, below 30.90. That's just an area you have to avoid these things. On the hourly, below 30.90. So that's why that has been down. It's going to stay down until it can move back above 30.90 on its monthly time frame. Take a look at the GLD and take a look at the daily. As discussed on Sunday, we are seeing that it hit that resistance level somewhere around there and is pulling back. So short term, we are seeing that gold is still generally sideways. We can say gold's been trading in this range for quite a while. And so, but right now we are seeing short-term resistance. So what I'm going to do here is, just in case the market decides to move higher, let's take a look at some long side ideas. Here's one, SPWH. I believe I mentioned this previously. The buy point there is 12.92. So if it can hold above 12.92, this one could be the new leadership You can see here that the RSI on the monthly is about to break out to 3-year highs, and the other one is not fully developed. The main MACD is not fully developed, as you can see, but the secondary MACD is crossing over with a crossover above 0. I would still look at this as a good candidate if it can hold above 12.92. Now the other ones are pretty much some regular names, and here we're taking a look at Facebook. If the market is to bounce, you can see that Facebook's been holding the 50 level and moving higher on the weekly RSI. 50 level moving higher, holding the 50 and moving higher, holding 50, moving higher, and right now it's trying to hold the 50, and it's already showing signs of moving higher for the next couple of weeks. So as long as that's the case, then you have to assume that if the market is to bounce, this is going to be one of the stocks that's going to be bouncing. For those of you who are looking for a short-term trade, there you have it. Let's take a look at another one here. Let's take a look at Apple. And here I'm going to go to a 5-year weekly, just like the NASDAQ. There's a chance that right here it's going to hold a couple of lines. So the first line is the line connecting the lows, like that, going back to 2013. All right, so that those lows pretty much self-evident, connects throughout this low, and right now it is holding. So at about $99 and change, it is holding that line. So that's the first line, potential support, and then the second line is coming from this level here. So if it can hold, the last time it held here was for nice lows, it bounced on the green line for the lows there, and now trying to hold. So if those two lines hold, just like the NASDAQ, I can see this stock moving higher over the next couple of weeks, assuming that the market is gonna bounce. Amazon, and here we're gonna take a look at the weekly chart, and you can see on the weekly it is bouncing above 50. So the 50 line is where it's holding. In fact, it's holding well above 50. I think here's a healthy stock which is showing support where it needs to. I think that's a sign of a stock that is bouncing at about 600 and change, under 620. The stock is still within a reasonable buy point range, and I think eventually over the next couple of weeks, if it can hold, it should actually see higher prices. And there's also another view. If you take the lows on the RSI on the weekly and connect them, you can see that it connects perfectly with the lows here, and now this support line. So if you're looking for a bounce in Amazon, there's your signal. Let's take a look at NFLX, Netflix, and here we're also seeing it bounce above the 50 for nice lows there, bounce on the 50 for some lows there, bounce on the 50 for lows there, and now bouncing on the 50 for short-term lows here, which suggests that all things held constant, this is where it might start moving and probably might hold higher over the next couple of weeks. Let's take a look at the other name. And here we're also seeing that Google is also holding up pretty good. I believe you draw a line connecting the lows, something like that on the weekly time frame, holding, and now support there. So here it might start bounce. Of course, the key on all this is right now they look like they're bouncing, but should they turn around and break these trend lines, then we should expect them to see lower prices. But for now they are holding, so let's play the bounce. Let's take a look here in conclusion at the NASDAQ weekly, because I think this is the key for the entire market in my opinion, and it is the same chart as Apple. If these two lines hold, line number one, if this holds, this 5-year weekly chart, if that support line, trend line holds, the market should bounce. And also if this line there holds, the market should bounce. Otherwise, if we break through those two lines, then we are going to see the drop that we've been expecting in the market. Also keep in mind that for the NASDAQ, the level to watch there is 4683.92. Anything above that, and this market should move high. For the S&P 500, the level to watch is 1921.22. Anything above that, and the market might bounce. So just be aware that even though the market right now trading with the Dow up 45 points, not a strong bounce, but those weekly charts are starting to look a little bit interesting. If they bounce, expect the market to be on a good uptrend. Otherwise, a break of those trend lines on the NASDAQ charts, then that's going to confirm that we are still in a bearish situation. Eric Mwadid, Mwadid.com. I'll keep you guys posted. Good luck, peace, and blessings. I'm out. Woo.